Live?
Streaming.
All right, what's going on, everybody? We are excited, or I am excited to talk about house hacking today. So we're live here on YouTube. I got taking Instagram over here. And if you're watching in the recording, which is where about 95% of the views come here on YouTube, that's what we're going to talk about. We're going to talk about how to house hack, what house hacking is, kind of some strategies that work for 2023, and why it's a great investing strategy for a lot of the people that want to invest. And a lot of the people that I know that want to invest, this is a great initial strategy for you. So if you're just joining, let me know where you're from in the chat box on YouTube, TikTok, Instagram, stay there, or head over to my YouTube and interact there. Let me know where you're from in the chat box. I'm going to introduce myself, and then I'm going to quickly kind of talk about inflation, the real estate market, and interest rates, just quickly, because this is kind of a live today on Thursday. I'm recording this, and then we're going to get into house hacking, but this is going to be a quick live overall. So stick with me if you're live, and if you're not, if you're watching the recording, check out the whole time, share it, and interact. You can walk through. It's fine, you knucklehead. All right, here we go. All right, so my name is Sam. I'm a real estate investor. I own a house buying company here in St. Louis, Missouri that's going to buy about 300 houses this year. We're probably going to wholesale about 225 of those houses, and we're probably going to fix up and flip about 75 of those houses. So that's the biggest company I own as far as employees go. I also have 2.1 million followers on social media and a mentorship that has 1,100 students that own over 200 million in real estate in my mentorship. So it is the fastest growing real estate investing mentorship out there because it is the best real estate investing mentorship out there. I give away a crap ton of information on for free, but like that, the mentorship is hand-holding, one-on-one calls, all that next level type stuff. So if that interests you, just check out the description below or just check me on social media. You'll see the link how to get involved. So, and then I also own $42 million worth of real estate that I bought without using any of my own money. Tomorrow I'm closing on a motel that I'm buying that we're turning all into some single family rentals, every single unit, 19 units. So that is going to get me to $45 million. So as of tomorrow, I will own $45 million in real estate that I bought without using any of my own money. $45 million in real estate, none of my own money. Let me know where you're from on Instagram and TikTok if you have not. If you are here on YouTube or TikTok, Instagram, check out, just DM me on Instagram training and I'll send you some free training, pretty simple stuff. So that's a little bit about me. Now let's talk a little bit about inflation. So inflation numbers just came in yesterday and it is gone down. CPI, consumer inflation, has gone down to 5%. So that is huge in my opinion. It's not getting enough coverage because everybody loves fear mongering and fear whoring and they care all about scaring people. Like if inflation came back higher than expected, it would be all over your news channel, all over social media. You would be inundated with the world is ending, inflation is out of control. But the fact that inflation came in below expected, what they thought, it's not getting as much, which is ridiculous in my opinion, but I guess that's what you expect with the world and echo chamber that we're in today in social media. But it's a good thing, and inflation is at 5% right now. Over the past 70 years, the average has been 3.8%. So we're down to almost 1%, 1.2% higher inflation than the average over the past 70 years. It was 9% less than a year ago. So that is a huge dip. So the Fed is currently threading the needle and figuring things out. As long as unemployment remains pretty solid and as long as companies are still making money, they are almost a Hail Marys connecting here if they can get this inflation under control because everybody's calling for a huge recession and they may be doing that soft landing that no one ever talks about. So now if you're wondering why you are still paying more for gas and cars and groceries and inflation is so out of control, it's not under control, everything's the most expensive it's ever been. Well, that's how inflation works. It goes up 3.8% a year, so everything is always the most expensive it ever is. Things are never going to go down in price. If things go down in price, look at the 1990s in Japan. They had deflation. We do not want deflation. We do not want things dropping in price. If somebody thinks they can buy groceries or a car or a good for less tomorrow than they can buy today, they're not going to buy, and that would freeze up the entire economy. So what we're having is our inflation is slowing, but it's still going up, and that's what's going to happen. They're going to get it to 4%, and it's still going to be going up. It's just not going up as quickly. So we don't want things to completely drop off. We just want less growth in products and pricing, and that's what's happening. So everything is great on that front. Interest rates. Interest rates are kind of remaining pretty steady. I think they're mid-6s for like a retail house if you're going to buy your house that you're going to live in. So historically, that's still a couple percent below. If you've noticed, I just take general ideas and general actual stats. I don't do these rabbit holes to scare you. Of course, I could twist all these numbers and make it seem like it's a bad thing, but it's not. I'm just going to give you the simple facts, and that is, you can get a loan probably for 6.5% right now, and over the past 50 years, the average was 8%. A little over 8%. So right now you can still finance a loan for less than you could majority of the last 50 years. And if you're talking about investing, things are a little bit more expensive right now, but you're still able to cash flow. The Fed's funds rate is what everybody's talking about. That has nothing to do with a 30-year mortgage. That's a rabbit hole we're not going to go down. But the Fed's funds rate is never going to be zero again. So if you're waiting to do an investment loan at 3.5% and you're going to wait till that happens to buy a rental and cash flow, you're going to be waiting a long time because that's never going to happen again. Being able to cash flow at 5.5%, 6.5%, 7.5% is the new norm. So if you want to invest in real estate and you believe in the power of real estate, then you need to still be investing today, and you need to still be figuring out how to cash flow. And you're going to do that by following me on all my social medias behind me and the Faster Freedom Show podcast on Spotify and Apple, wherever you listen. So check all those resources out. I give away thousands of hours of free information every single month on how to invest in real estate. And Jaden's an ugly mug. Are you eating a potato? Come here right now, Jaden Jones. Get in front of the camera. All right, this is one of my editors, Jaden, and I thought it was an apple. You are eating a potato.
It's a potato. We're on a diet right now, okay?
Go away. Get out of here. That's like eating paper. That's like eating paper. Potatoes, I think, are known as not. Anyways. All right, sorry about that. That was not planned. All right, let's get into house hacking. Sorry, it took me 5 minutes to get into that, but 6 minutes, it is what it is. Some people do a lot less than 6 minutes. You know what I'm talking about. It only takes you about 2. All right, here we go. So house hacking, what is house hacking? House hacking is buying a single family rental or a duplex or a triplex or a fourplex, buying a property and then renting out a portion of that property to get extra income. Like I buy rental properties that I don't live in. You're basically buying a rental property that you live in. And a lot of people don't do this because they don't want to share a wall with somebody or share a bedroom, and that's fine, you don't have to, but this is an amazing strategy that will allow you to do a couple things. One, it may allow you to be able to buy your dream house that you can't afford right now. If you were to buy a house that's a little too expensive for you to live in, but it's a really nice house and you can rent out the basement, lock it off to a friend or somebody you know, and they live down there, obviously a finished basement, they can pay $500 a month. That is huge. That maybe will allow you to afford the house in the short term. So in the long term, once your income goes up or your side hustles go up, you can afford that house without somebody. So that's the pretty uncommon way to do it, is renting out rooms, but people do that all the time. The more common one is like buying a duplex, a 2-family, or a 3-plex, a 3-family, and renting out 1 or 2 of those sides. And this is something that usually younger people do without families. Not always, but that's where if you're young and you have a boyfriend or a girlfriend, or maybe you're hustling, have a couple girlfriends, good for you. Just kidding. Stop it. Don't do that. Regardless of your situation, if I was young and single, or even young and married without kids, I would 1,000% buy a duplex or a quadplex and live for free. You can buy a really nice duplex, live in one side of it, rent out the other side of it, and have pretty much all your monthly expenses paid as it pertains to that house. Or you can buy a triplex in a really, really nice area, live in one side, rent out the other 2 sides, and live for free. Your mortgage, your insurance, your taxes, your maintenance, everything will be paid for by the rent of the other 2 people renting those units. So that is where it can be extremely powerful if you do that, because you're collecting rent on somewhere you're living. So let's talk about kind of the benefits of it. First, it's going to greatly reduce your costs. You're either going to live for free or much less than you would live, owning your own place, or especially renting your own place. I know some people want to rent and have to rent, but you're not creating anything renting. You're just helping somebody create something. Being a renter is kind of like being an employee. It's fine. It's not the end of the world. It's what people love and want, and they want that security, and they don't want to have the responsibility of owning their own business. They don't want the responsibility of owning a property. That's fine. But the people that own the businesses are the people that create wealth. The people that own the properties are the people that create wealth. So it'll just allow you to reduce your costs so you can start to become a landlord. It can help you build equity quickly in a property. If you're buying a property, you're renting it out, the mortgage is getting paid down by somebody else, and that property is still going up in value, especially if you've created cash flow with it. It's going to be more valuable because it produces cash. So that equity growth, that property value and tenant paying the mortgage down, that grows over time, and that's where the wealth is. Wealth is created in equity, through businesses or real estate. That's where wealth's created. Wealth's not created in cash. Wealth's not created in the stock market. Wealth's not created in crypto. Those are great hedges. Those are great investment strategies to make money now. Those are great investment strategies to get rich in your lifetime. But generational wealth that can be passed down is passed down through equity in businesses and equity in real estate. So you can literally create equity in a property without ever having to pay for a dime on the property. You can utilize the BRRRR method to buy it and fix it up. You can utilize the rent that you're getting from other people to live for free, and you have your mortgage paid, all your taxes, insurance paid, plus positive cash flow that's probably tax-free because of depreciation, and you're just starting to see and test the waters of the power of real estate in that one rental property. Let's say you have a duplex that's worth 300 grand today and you owe 225 grand on it. 75 grand equity. In 15 years, that duplex, or whatever I said, triplex, let's call it duplex for simple math, that duplex that's worth 300, the owe 225, 10 years from now, that duplex is going to be worth 400 and you're going to owe 150. So you're going to have $150,000 in equity in 10 years. Now, you might not want to live with somebody else for 10 years, and that's fine, but you will start that path now that you might not be able to start on your own. And you're living for free and allowing yourself to maybe, do a job that doesn't pay you as much, that allows you more freedom of time so you can create wealth and on the side with your side hustle, as opposed to having to pay for all of your expenses yourself out of your W-2 income pocket, working 50 hours a week and not have any time for anything else. So it just can potentially allow you more free time. And it can also provide that additional income. Having a fourplex and living in one side and renting out the other three, I mean, I don't know exactly math, it varies for every situation and every property. That's probably $400 or $500 extra a month. So imagine having all your expenses paid and making $500 extra a month. You could pay for marketing and buy more real estate. You can go on a nice vacation a year. You can do so many things. Oh, we're good right now. Thanks, Bubba. So yeah, that is completely, a couple other options. You can $500 a month. Again, you can do way more than that, but that's just kind of a general number for you. And then my favorite part about it is it helps you understand real estate investing. If you're on TikTok, Instagram, like this, share this, let me know where you're from. YouTube, if you're still here, let me know where you're from. You're probably watching the recording. There's probably 8 people on the live, but you're probably watching the recording. Jane said, yep. You're probably watching the recording. Most of you will. So house hacking is just a great way to get involved in real estate. Many of you don't want to be a landlord because you don't want to have to deal with a call in the middle of the night or have to pay a maintenance person. Well, then buy a multifamily, live in one part of it, and then you're not going to have that many issues, because if you have a nice rental property and get a nice tenant, you rarely get a phone call, but you're right next door. You can take care of it. You can talk to the tenant. You can literally be hands-on with limited time, and you can still take care of your tenant. So it's a great way to kind of dip your toes in the water. So let's talk about how to house hack a little bit. Now, if you're buying a single family, duplex, triplex, or fourplex, you can utilize the BRRRR method the standard way, which is buy, rehab, rent, refinance, and scale. So you can use a private money lender or a hard money lender to buy a distressed property. This works again with singles. I'm just going to say properties, but it means single family, duplex, triplex, and fourplex. Buy a property, somebody else's money, hard money or private money, fix it up, make it all nice, make all the units nice, live in one side, and then you can rent out all the other sides or other rooms if you want. So you can start, it's like having a multifamily, but you're living in one part of it. So you would then get the property rented, and then you would take it to a small local bank, and they will gladly do either a residential mortgage on that property or a commercial loan on that property, give you a loan to pay back your initial lender back plus interest. Now you owe the bank money, but you're collecting rent with your neighbors, who are your renters, every single month, which is going to pay your mortgage plus all owning expenses. So it's the BRRRR method. It's just done with potentially you living in it and collecting rent, not somewhere you're not living. So it's extremely powerful. A lot of people want to get in real estate, but don't want to do it, or they have to learn trial by fire kind of thing. Well, this is a great way to have trial by fire, is just jumping in and doing it. So anyways, any questions in the chat box? If not, I wanted to do a quick one and just talk about house hacking, let you know a little bit. Hopefully you appreciate the candor, the authenticity, and just the, not buttoned upness that a lot of people have. So make sure you're following me on all my social medias and the Faster Freedom Show podcast. And trying to go live every Thursday here and give you as much free information as I can. Let me know if you're interested in learning any more. Just DM me on Instagram and I will answer the messages. Peace out.